So now we're going on to sort of the mid time frame for all of this. That candle wick. I think that candle's already filled it. Has it? Or am I just going crazy? Oh, never mind. Yeah, I can delete that now. Whoops. Okay, that's my bad. Anyways. Okay, so we're gonna go do the mediocre time frame. So like your mid time frame. So your trades you can expect a few, like usually about an hour, between 30 minutes to an hour to take profit. So again, you're sitting on the 4 hour chart, you're trying to identify whether price is moving bullish or bearish. Remember, bullish goes up, bearish goes down. Okay, so again, I explained in the previous video, we had a candle closure below this previous low. Yeah, boom. Okay, let me get rid of that because that's pissed me off. Anyway, so there's our middle mark. This candle's wick has broken structure to all of these previous lows. You got 1, 2, 3, 4, 4 previous lows. You don't want them anymore. You're now moving bearish. You know this candle's direction is more than likely going to target something else. Now what I like doing is I like targeting sort of previous fair value gaps. So I'm just going to mark this out over there. Yeah, that should be good. Okay, so now I've got a previous fair value gap down here. But yeah, so in my eyes, I see gold breaking straight through that. No fair value gaps being left behind. And no inverse fair value gap hasn't been filled, although, yeah. So in all honesty, price could come back down to the 2400s to fill this up. Yeah, I mean it could, it's not impossible, but we could see price. Okay, yeah, anyway, I'm going off topic now, sorry. Yeah, getting back into it. So, 4 hour chart, we know we've broken structure to the downside. So, this is where you're going to be using smaller, smaller lot sizes. And you're going to be targeting like decent amount of profit with the smaller lot sizes, but your stop loss will be bigger. Okay, so go on. There was actually a live execution of this. I can probably get it. Okay, but anyway, so we go on the 1 hour. Obviously, we know we're bearish. If I actually go back to the 4 hour chart to mark out that 4 hour candle that broke the structure. Yeah, you go over. Okay, so I'm gonna go into the 4 hour chart. So this is a previous, or this is a candle that sort of closed below it. Say, let's use, yeah, I'm gonna use this one for it because that's the one that actually broke it. Then we're gonna go down to 1 minute. I'm into the 1 hour, sorry, and see what's happening from there. So it would be, what time was that? Yeah, use that candle. Okay, so yeah, it's everything you could have wanted because there's your 2 o'clock candle. Yeah, this is what you are looking for. Let's go. Okay, so On the 1 hour chart, again, you're going to be looking for the same thing all the time. A fair value gap. Okay, boom. That is a plain and simple fair value gap. Yeah. So higher time frame, pop down to the 30-minute. Now you can see, oh wait, there's not a fair value gap there. But if you look closely, there's a fair value gap there. But that's a bullish fair value gap. But because price has broken through it, it's seen as an inverse fair value gap. So price is going to return back into it and continue in the downtrend. So you getting on the 15-minute. So you've got your zone marked out. You've got everything marked out that you need. Okay, so once price comes back into your zone, what I like doing is I always wait for the 50% zone, and that's the side high or closer to where I'd want my stop loss to be. So this part of the this part of the rectangle. So yeah, say you were lucky enough to get your entry on point, stop loss you'd put to a previous high. So I'd be marking off to these highs probably. So mark it off there, those highs, and then you'll take profit. You can target wherever. Again, do that one-to-one thing. So if you wanted your one-to-one, you can knock it down there, boom, and then go for your one-to-two. Like I say, use smaller lot sizes on this because again, it is going to be a little bit riskier, and yeah. So I mean, look at that. That literally would have taken you how many minutes? Entry perfect of that candle, so you're waiting 15, 30, 45, an hour. You're waiting an hour, 15 minutes for your take profit to be hit. It's genuinely not that much. What you could have even done is target previous lows, which was down there. And you could have gone 1 to 2.3. Could have played it even riskier, put your stop loss to those highs. Again, on video purpose, I'm just putting it to previous highs as a safer option for it. But again, it's not difficult. You don't need to overthink any of it. But most of the time, you're looking to take a trade at about usually between 11 and like 2ish. But candles aren't always perfect. Market's not always perfect. But yeah, that would have been a perfect setup. It's all you needed for that, an hour 15 minutes. But again, even though there is a bullish fair value gap down here, don't trust it. Go on to the higher time frame, 4 hour chart. Yeah, look at what is happening. You don't want to stay on the lower time frame, and on that lower time frame you're seeing, oh, there's a fair value gap there, I'm going to enter for that. It's not how it works. You've got to go into your higher time frame and look where market wants to move. I would say go onto the weekly or the daily or anything like that, but you're not going to see much on the weekly, especially with gold. Even so, price did break structure. It didn't actually break structure to the downside because it didn't close below a low, which was down there. If this candle over there were to have closed down here, your market's moving down. But anyway, I'm not talking about that now. But yeah, so that would have been perfect execution. Could have waited an hour, 15 minutes, and you would have hit take profit. Like I say, don't be scared of the fair value gaps. Don't be scared to trade through them. But that is how you would find your entry. And the only reason this fair value gap worked, the inverse fair value gap, is because we have a previous high up here, okay, and did we have a new session? Okay, so this was an Asia session high, so you have different sessions. So let me just, can I not write on it? There we go, so that was Asia high, okay, then, oh, that's gonna piss me off, okay, let me do it like this rather. This might be a longer video as well, but if it makes you money, it makes you money. So there you go. So we got Asia high. Yeah. Now from your Asia high, you then have your New York or your London session open. Sorry, which would be 6 o'clock. Text. And we go London open. Okay. This is UK timing. Can I not change? No, on horizontal right in. Can I move? Ah. Top. Why is this the middle? Okay, we're just gonna have to work with this. Okay, there we go. I can do it like this. There we go. That's better. Anyways, so come down into it. You stay on the 30-minute for this. You don't need to change into anything else. You you can ignore these previous ones because that's previous day. But you've got your Asia session highs. Market's swept those. So market has then gone higher up than them over there. And that could have been your first sign that we could get a market reversal. But you don't want to enter off with, you don't want to enter off with that because you had no confirmation from the higher time frame. So when we went onto the higher time frame, we then got into it to see that, oh look, something's been swept, inverse fair value gap, entry off of there, boom, 1 to 2, 1 to 3. But yeah, just, I wouldn't say risk it, but I don't see the market have a massive crash. I don't see it dropping back down, but yeah, that's all for that one. I don't think there's anything else for that 15-minute entry model. No, that's that. Boom. But that's it in play. London Open swept an Asian high straight down to New York, to New York Open. So again, it is a good trade. I think I did take it, to be fair. What was it? No, I didn't. I took the sweep because I took the sweep from 2586 to 2578. Yeah, that was what I took. But yeah, that's all really for that one. But yeah, just don't overtrade it, especially with these ones. You're going to be looking for like 1 to 3 trades a week, if that. Um, the more you ever do it, the more money you're going to lose. The less you do it, the more money you're going to make. So yeah, that's genuinely all for that one. But yeah.